Moving on to our next panel, it is going to be on the cost of living crisis and innovating to support those in need. We'll be taking a deep dive into how the FinTech ecosystem is stepping up to help individuals and businesses navigate this period of economic turbulence. How can we fully unleash the potential of FinTech to help even more consumers? And what role must the government and regulation play? And to kick us off with a few thoughts and introduce our panelists, I'm very pleased to welcome Tom Bull, who's the partner and head of FinTech growth at EY UK.
That's awesome. Thanks so much, Rashi. And welcome to this panel session on the cost of living crisis and innovating to support those in need. And this is a topic, as Janine mentioned earlier, we've worked closely with Innovate Finance on over the past year or so, publishing a report which goes into quite a bit of depth on the use cases and players we see as innovating in this market, hosting a hackathon over the summer to really develop those use cases further and kind of put some of that good work into action. So thank you for your partnership on this. But delighted to invite an amazing panel to discuss this with us today. First up, we have Sharon Evans from TotallyMoney. Sharon's got over 20 years of legal experience, including with firms such as DJ Freeman and Pinsent Masons. Sharon's the Chief Legal Officer at TotallyMoney. And TotallyMoney, for those who don't know, is a free app that helps you improve your credit score, borrow better with tips to help you get smarter with your money, essentially. So welcome, Sharon. Next, we have Clare Moriarty, the Chief Executive of Citizens Advice. She's been in that role since April 2021. So Clare leads the national charity as well as the network of local Citizens Advice charities across England and Wales. As many of you will know, of course, Citizens Advice really focuses on giving individuals the knowledge and confidence they need to find their way forward and speaking up on behalf of those to bring about wider change as well. Next, we have Andrew Rabbitt from Incuto, where he's the Chief Executive. Incuto, really a data-driven platform, Andrew, helping ethical, affordable lenders be more resilient and more sustainable so they can get to more people. And last, of course, Chris Skinner, a very well-known, influential voice in the financial services market, particularly through his blog, thefinanser.com. And Chris has literally written the book, Chris, recently, I guess, Digital for Good, where you focus on technology and finance and how they can work together to address many economic and social challenges. So looking forward to hearing from that as well. But I'd love to start with you, Clare, if I may, because I'd love to hear a bit about some of the problems that you're seeing customers face today. And is there a kind of a trend in the profile of customers that you're supporting, and are contacting Citizens Advice?
Thanks very much indeed. So I think there is a sense that the cost of living crisis is passing. Inflation is coming down, incomes are starting to rise to catch up, and that's fine if you are benefiting from that. But there is a whole cohort of people whose finances were fundamentally put out of kilter and for whom that's simply now being entrenched. And those people, we talk about living on empty, and those are the sorts of people who are needing to come to us for help. So we are seeing more people in 2023 than in 2022 who need food bank vouchers, who need charitable donations just to be able to put food on the table. One of the really interesting markers is the number of people who are coming to us for help because they can't top up their prepayment meter. In 2022, we saw as many people as in the whole of the previous decade, and by the end of September, we had already seen in 2023 as many people as in the whole of 2022. So these are numbers which are rising. There isn't a sense for the people coming to us that we've got over the hump and things are starting to get better. Another thing that is becoming really problematic is around rent. We know that mortgages have gone up, and we are seeing more people coming to us who are mortgage holders who've got a problem there, but also higher mortgage costs knock through into higher rental, and we are seeing increasing numbers of people who are coming to us with issues of homelessness, more people in August than in any previous month we'd seen. And evictions are, Section 21, evictions for kind of no fault are still happening. So it's a pretty difficult picture for people. We are seeing more people who are in work coming to us, and people who will come to us and say, I never thought I was going to need this sort of help. Because it is, for a group of people, if your finances are being put out of kilter, That's how it's staying. It's showing up very much in the number of people who've got debt problems. So last year, we helped 335,000 people with debt. And we know that there are many more people who need advice, but there isn't enough capacity in the system to help them. And what the thing that really worries us at the moment is when somebody comes to us for debt advice, the first thing we do is to create what's called a standard financial statement. So an advisor will sit down with them, understand what their income is, can we maximise their income, what their outgoings are, and that's looking at essential outgoings, not what they like to spend, or not even what they are spending, but what is considered to be essential spending. And we're now seeing that half of all the people who are coming to us for debt advice, those numbers are just not in balance. So they are month on month in debt, rising debt in a way that there isn't anything, there are no quick fixes that will help deal with that.
Thank you, Claire. That's important, but obviously very sobering kind of context for the discussion. Chris, I'd love to turn to you, if I may, and ask a bit about how innovation can really be harnessed to support customers facing the kind of difficulties that Claire outlined. And along with that, are there some kind of risks that go hand in hand with that kind of innovation that we should be watching out for?
Yeah, I mean, the conversation about innovation and regulation and risk is a very long one, so I'm not going to go down that route too much. I'll focus on my advice to most fintechs is fix the things that banks do badly and focus upon the things that banks don't do at all. And on the latter point, I think there's a really interesting discussion over the last decade around financial wellness, mental health and the link that has to your finances, financial literacy and educating people, and financial inclusion for the people that don't actually have bank accounts, which are often the ones that get punished the most because they pay the most for dealing with their finances. And during this crisis, I think the biggest thing is the development of personal financial management over the last 10 years has created a great way for people to be informed about the future impact of outgoings on their accounts. But in particular, the issue is more now in the cost of living crisis that people cannot manage their accounts because there's too much exposure and risk for many individuals, for mortgage rates rising, for the cost of living of energy in particular, for example, which all stems from things like the destabilization of the markets because of the Ukraine-Russia special operation. And so what I really see is fintechs are doing some interesting things. I mean, N26, for example, which is the challenger bank that came out of Germany, but it's pan-European, is eradicating all custodial fees for customers. There's a pension provider called Cushion, which is actually providing far more information around how to manage your forward support as you grow older. Starling has done some really interesting things around money management. And there's another one, Noose, that's N-O-U-S, that's doing money management information saying, well, this is likely the next month, 3 months, 6 months of how your account's going to have outgoings and the impact it will have. So those factors all are critically important, but I think particularly financial wellness is the one I'll come back to because most people who have depression is caused by the fact that they can't afford to live.
Yeah, thank you. Some really neat examples there. Thanks very much, Chris. Sharon, I'd love to turn it over to you, if I may, and kind of following on from that, the theme of some of Chris's comments there. What are some of the neat examples you've seen of fintechs really innovating to support customers in this environment? And I know you guys are big users of open banking and some of those tools, so perhaps you could tell us a bit about some of your experiences as well.
At TotallyMoney, our core product has always been focused on an underserved population, so the people that really struggle to get served by mainstream finance anyway. And so I guess like our whole reason for being and at our core is to try and deal with some of the things that people were already dealing with before the cost of living crisis and now has only got worse. So we're all about showing people where they stand in terms of their credit report, their credit score, demystifying what is a really complex ecosystem that was never built for customers to actually understand, and to make it really clear that how people are seen by lenders when they are trying to access affordable credit. So taking all that into account, the first thing that we've done during cost of living crisis is to really, as Janine was saying earlier actually, like looking at things that already work well, but how do you make it work even better? How do you get even more action oriented? How do you make it even clearer for customers? Because at the moment, people don't have necessarily the headspace to really work things out for themselves. You have to be very sort of directive with them about, these are things that are working for you, here's what's holding you back. And so we've definitely done a lot within our product to just visually and through prompts and push and personalised plans help customers get the information they need. And we've got engagement is record high, so we know that this is what people need to do. Some people, it won't help them access credit, just in being able to sort of improve their score a little, but for many people it does, because eligibility for credit at the moment is slipping. So it's important for people that they do what they can, that they're in control of. And for the open banking point, I think this is still a game changer. I mean, I know that AI is the buzz thing now, and a few years ago it was all about open banking, but I'm not sure that everybody knew what to do with open banking, and I think it took a little while for it to get going, and for people to understand that they could use it in a way that really complements their core product, rather than just kind of creating a bolt-on, have a look at how much you spend on coffee type thing. And so we've worked really hard to figure out how open banking can be really woven into our products. And we've come up with something where we're now showing customers of their monthly bills, the bills that will actually impact their credit score if they don't pay those bills. And so that's, if you're serious about trying to improve your credit profile, that's really important information, because people don't always know which things will harm them by not paying them versus the things that and so that for us has been really well received by our customers actually. So that again seems like it's providing people with proper practical support.
Fantastic, yeah, and brilliant to see open banking really starting to sort of get more deeply embedded across the sector. Andrew, I'd love to bring it to you if that's okay, and hear a bit about the credit unions, kind of community lenders, you work with, the important role, they play in supporting customers through the cost of living crisis. What kind of challenges are you seeing those firms kind of facing into, and what are some of the ways you're working with them to overcome that?
As the kind of person on the panel that no one's ever heard of, from an organisation you've never heard of, we align entirely with our organisations that we support, which is that basically they're there, they've been there since, in some cases, the 1960s, fixing a problem which has been around for decades. But like 3 or 4 years ago, it got covered in The Independent and The Guardian, and so now we're all in a cost of living crisis. But the people who are most affected by it have been in that for decades, right? This isn't new. In fact, ironically, they're probably more resilient to it than most of us, because they know they can't go to a bank and get a credit card or get an increase on the limit, and they've been feeding the meter for decades. So to an extent, the group of people that are now most impacted are people who've gone to the bank and just realized that they said no, and yet nothing changed. And so what we're seeing with the credit union sector is they're facing the challenge of scale, of how do you actually address that new market of these new people who are coming through and trying to find products. And we're actually about to start working with TotallyMoney. We've been on that journey for some time, and that in its own right sort of demonstrates a point, which is people are going to these channels to find a product, and they're very often now getting a no. And actually, if you think about that AI revolution, what actually people have done is invested really heavily in technology to speed up saying no to people. Right? And do you know what that's done? It's done something really cool. It's driven up the cost of lending. So then they can say yes to far fewer people because it's less economic to do so, right? So we've taken that same technology and gone, hey, how do you co-create a product around an individual? How do you take a mini challenger bank who are community focused, who don't have a cool brand, they can't get a fancy name and you've never heard of them? How do you get them in front of the right people at the point where they need it? How do you give them the tools to leapfrog mainstream finance and give them that same technology, but give them it in a way they can do it? And the challenge that they face is at a subscale. So we've got some super cool partners. We sort of hogged TransUnion's stand early just to get a photo, because we work with people who have been prepared to recognize us as a point of aggregation for the sector. So we've helped to super scale some of those transactions. And to give you one single number, we've got the cost of lending for our lenders down to £8.10 to issue, to receive a loan, do all the underwriting and receive payments back. That's assuming a 6-month repayment by direct debit, £8.10. Most high street banks couldn't tell you how much it costs, but I can definitely guarantee it's not £8.10.
That's good.
Right? And we've done that for people you've never heard of, that are completely subscale, and you've never heard of us either. So we like that. I'll give you a second number just because Philip used it earlier. We've also had the impact. We don't lend to anyone, and we're not a price comparison site, but our lenders through our platform since we launched in 2018 have lent to people, and the money that they've saved in fees and interest versus going to a high-cost lender is 305 million, which we're really very proud of because that's our impact in the world. That's what we came here to do. So we came here on purpose, with a purpose, to do that for people nobody's ever heard of, to try and help it.
So many great examples of firms doing some really good work. Clare, I'd love to come back to you, if I may, and ask, particularly for this audience of technologists, of FinTech people, what more do you think we should be doing to support customers, in this difficult time that you outlined earlier?
Thank you. So, I think it's really interesting thinking about FinTech because inevitably FinTech has mostly been applied to products and how do you either, make products available to people or kind of, as Andrew was saying, speed up the process of dealing with them. The people that we are dealing with are mostly not in the market for products at all. They probably have a bank account because in order to receive a benefit, you need to have a bank account. But we have a fascinating conversation with UK Finance every 3 months, and UK Finance have numbers that show that actually people are managing quite well. And, there's not huge arrears, and, people aren't, debt isn't building up. And we, the charities dealing with this group of people, consistently say, well, we know there is a huge problem. And it's not that UK Finance are wrong and we're right, but the reality is that, in a population of 70 million people, there are people in very different circumstances. So what we're looking at is the people who aren't using products, and we think there's there is an opportunity to use open banking, to use FinTech, to help people, particularly in the debt process. Because as I was saying, we helped 335,000 people last year, but that's not all of the people who need debt advice. 30% of a debt advisor's time with a client is actually taken up with quite a time-consuming process of gathering information, to help the client. A lot of that information comes from creditors, so that people with debt don't feel that they're in control. We've been having some really interesting conversations as part of a hackathon with EY and with Innovating Finance, trying to look at whether there's a way of using FinTech for a different group of people and using open banking, both to speed up the process that debt advisors are going through so that we can provide debt advice to more people, but also to give people control. So I think that whole question about giving people control is really important. And if, I don't think, open banking, as Sharon was saying, is still a bit in its infancy, and we haven't by any means tested the limits of it. But if we think about it as something which is about giving people control, and then try to apply that to people who are not in the business of, is it this product or that, or even through my credit score, but just kind of, how do I deal with debt?
Fantastic. I know we've worked through this really challenging topic, so thank you all, and please join me in thanking the panel.